The Nasdaq is only 3% from its 52-week lows. How much longer will the pain last, and how do you position here? Let's ask Delano Saporu. He's New Street Advisor, CEO, and a CNBC contributor. And Delano, I'll ask you the question to begin with. It might sound obvious, but why are we down so much today?
Happy holidays, Kelly. It was surprising yesterday when we kind of had a big jump, but there's some clear reasons in my mind why we're down today. If you still look at it, even though we had the surprise consumer confidence number yesterday, inflation is still outpacing wages. We still have a record 8 straight months below 60 on the University of Michigan Consumer Sentiment Index. And so yesterday's rally was kind of a surprise to me. If you look at some of the, the macroeconomic numbers, especially on the consumer side, it shows that we're kind of weakening in that area. You see inflation adjusted, retail sales are negative, and it's pointing to a consumer that's getting weaker. If you look at some of the things that's happening in the auto market, we're seeing, we're seeing repossessions happen at a much higher rate. And so I think, investors are kind of level setting, how optimistic we are on what's going to be happening in the very near term, and that the consumer may be weakening a little bit.
Yeah, and Delano, do you think part of it is kind of, what do they call it, the bullwhip effect, right, where we've gone from, having these huge shortages in things like chips and autos to now potentially being on the flip side of that? And from that vantage, you can see where the deflationary pressures come from.
Yeah, 100%. And that would be obviously, playing to even further with, deteriorating demand. So if you're having obviously less shortages, you're having inventories higher, you're not having an inventory glut, and then you have potentially weakening demand, that definitely plays a point to it. And then we saw obviously something that could be, offsetting this with the numbers that we saw with the initial jobless claims coming in. So a lot of that coming into play here, but, this is an outsized move, and investors kind of putting pressure on stocks right now.
And we'll talk in just one second. You have some particular ideas, but does it give you pause when someone like David Tepper says, yeah, maybe I'd be leaning short in this environment? Don't bet against the Fed, basically, and now they're going the other way.
Yes, it does. And for myself, I've been saying kind of just still, pausing for the next 2 or 3 months, at least, to taking large positions that are bullish. People can still nibble at stocks and buy areas that have weakened, and we're going to talk about those names. But, betting right now in the end of 2022 and the first quarter of 2023 that we're going to have a bull run, I don't think there'll be that Christmas rally in my estimation, but it's yet to be seen. But that would be my guess.